So in the last session, we did speak about how the structure is formed, and we went in the very basics of it, right?
Yeah.
So today, I think, today we'll cover the break of structure. Okay, we'll try to cover how the structure changes and how there is like a transition in the trend. So we did speak about it, but not that deep. So let's get started with it. So again, this will be bullish side, this will be bearish side. So now we'll speak about the structure which really happens during the live market and not the textbook example such as this. So this can be used as a very good example, and maybe like only 3% of the times the market is going to be this clean. Okay, not always, but in reality what happens is like there will be a bullish structure, but in reality it might look something like this. Okay, so for us we need to understand, okay, fine, if this is the main structure, this will obviously be like the internal, because it is forming within the main swing points, because the like the last high is getting broken, and that's how it's progressing with it. So we'll just study about that today, and we'll try to take a look. So anyways, so in the real situations, the market conditions might most likely look like this. So we all we care about and all we need to understand is that the main swing points, which is this. Okay, so once we understand that, anything in the middle, whatever is happening, such as this, will be our internal structure. So anything which is happening in the middle, such as this, such as this, such as this, such as this, all is going to be internal structure. Because why internal? Because that's forming inside of the main structure, to be precise. That's happening inside of the main structure. So if the main structure is this, anything happening here and here will be internal structure, because that's like the main structure. And in those swing legs, this is what's happening, and that is the internal structure. Okay. So again, what happens sometimes is that we often get confused by this, or else, when it progresses to the upside, we think that, okay, fine, what, this might be the break, or maybe we say this is the break and now we look for sells. But at the end, that's internal, because it's inside the main leg, right? Sometimes guys they think that, okay, fine, since this low is getting broken, they should look for sells here, which is absolutely wrong, because the main thing is bullish, and that's just like the retracements. So the retracement comes because obviously there is a phase of profit taking and stuff. So that's why retracement like these come, and obviously the price cannot just move towards the upside all the time, because that will be abnormal behavior for the price itself. So that's the reason why we need to have phases of retracement. And since FX has sessions, so most likely let's talk about this day. So let's say this was just like one day. Okay, this was like a day. Okay, so the day might start with the Asia, where it might be in a range. Okay, then afterwards, what can happen is that there might be from this to this, which might be like the London session, and afterward it can be the New York session, which can be this. So this is how the day might progress. So anything which is happening in the middle will be the retracement phase, and followed by a lot of sessions together. So we'll try to see and try to understand like, okay, how does the overall market structure play out? So if we talk about this overall example like this example, the color is quite irritating. Um, so if we talk about this example, starting from here to here, we can see that the trend slash the structure was bearish. Okay. And anything in middle, whatever is happening, such as all these moves in here, is nothing but the internal structure. Okay. And the reason it's internal because it's happening within the main structure. So as we can see that these were the points, these were the lower lows and lower highs. And inside of that, there can be a couple of lows, highs, higher lows, higher highs, higher lows, and higher highs. Okay. This might be the case in the live market most of the times. But to deal with this, we can just keep it very simple by knowing the main points. And anything happening inside that is going to be internal structure. Okay. So for example, let's go on 5 minutes. So for example, if we try to understand the move from here to here, whatever is happening, we can say that, okay, fine. This is like a bullish structure altogether.
Bearish.
Yeah, sorry, a bearish structure altogether. Yeah. And also at the same time, anything happening here, which will be the counter trend, will be retracements. So in a bullish structure, this will be the counter trend, and that will be the internal structure. So counter trend will always be the internal structure. Okay. So let's say we are bearish. So anything happening in middle of the lower high and the lower low will be the internal structure of that leg. And then in that, there might be the structure altogether of the internal structure. Okay. Yep. So just again, if we try to look at the M1 now. So based on the minute 1 time frame, we'll see that this was the structure pretty much. See, so once we know the structure and once we know where the market is trying to head, we can use very simple concept just as the premium and discount for the entries and just get right with the direction itself. So for example, this was the high and this was the low of the bearish leg. So we can just have like the entry on the 50% and still be right with it. Okay.
Could not get this.
So, sorry?
Could not get this. The discount.
Okay.
This one.
Okay, fine. So let's say we are bullish. Now the retrace. Now the point is that we need to buy lower, right? Because we sell high and buy low. Yeah. So 50% is the point which determines whether the price is high or the low. So so this is known as, so anything above the 50% will be known as the premium. Anything below the 50% will be known as the discount. So in this example, let's say this one, this will be the premium, this will be the discount, and the 50% itself is known as equilibrium.
But how do you know that this is the 50%? Because the market is still in the move.
So that's where the structure comes into play, because we calculate the premium and discount based off of the structural moves. So meaning, whenever we draw premium and discount, let's say we are drawing a premium and discount on the 4-hour time frame now. Okay. So now, if we say we want to draw the premium discount, we need to know the trend, which is bullish, obviously, here. Yeah. And from the low to the high, that will be the premium and discount. So in a bullish market, we'll obviously try to buy in a discount. So now that we are in a discounted zone, this is like the ideal price for buying. So now the next step will be obviously finding out key levels for looking at buys, which will be refined in the lower time frames. But this is like the later part. I just don't want to confuse with it. But again, if we come on the structure part, so this will be the internal structure. Okay.
Yeah.
Anything which is being formed inside the main structure will be the internal structure. Okay. So
And
let's go on.
it doesn't matter like if the main structure is broken one or twice, like it's in the bullish, it's not making higher highs. Maybe one high is lesser than the previous high. Does it matter?
So we obviously have to look at the structure in terms of the average movements. So sometimes what can happen is that uh, now there is disqualification sometimes because this might be the structure which is happening, and now there comes this and goes up. So obviously, comparatively, see the moves over here were having big retracements, but this retracement is very small. So again, this is the higher low, this is the higher low. This will be the only higher low. This won't be the higher low. This can be the higher low on the lower time frames. So let's say altogether this is the chart of 1 hour. Okay. So this over here can the 15-minute structure because it's small, right? So on the 15 minutes, this can be a clean structure. So obviously there might be continuations which might play out over here, but the structure level will obviously be this, which is the higher low on the R1 time frame. Okay. Is it getting confusing sometimes?
No, no, no. It's okay.
All right, perfect. So I just wanted to let you know about that, so we can move on forward so that we have more clarity now. So now I'll try to give examples of how the overall structure translates and or else like transitions, right? So in reality, the market will obviously be this. So now this will be the main structure.
Yeah.
Because this is the lowest it went before breaking the high. So this is the higher low because it's like the lowest point this high created before breaking it. Once again, this is the lowest the market went before breaking it. So this point made the lowest point, which is this, before breaking it. So this will be the higher low. This won't be the higher low, right? Because the lowest point will be the higher low. Okay. The lowest
And
point will obviously be the higher low.
if the second higher low is equal or below the first higher low, then like the market
So
goes, yeah,
so if it's like completely equal,
yeah.
then then it will be the same.
Okay. And if it goes below, then market moves up,
So like this, right?
yeah,
So this
much more lower than this.
much more lower than this, like breaking this.
Yeah, yeah, yeah.
So if it
And then
breaks, it's no longer bullish. It will be bearish because that's like a break of structure now.
okay. And if then market moves up,
Okay, if from here the market moves up,
yeah,
okay, fine. So in that case, this happens in a very this happens very rarely, but you will obviously have signs to get in buys there. on the lower time frames. So I'll give you an example. So the thing is that, see, as per structure, the 4 hour was this, it broke, right? So technically, once it broke, it should have like dropped down, because now it's like a break and it's no longer bullish. But what's happening is now we are obviously getting on this level, right? So when I was here, I wasn't expecting that the price will really like go higher. What I was expecting is a short-term buy and a sell. And yesterday, even I was having a session with the guy. I was telling him that I might look for a sell over here. But there was one condition I had, and that's like the rule which we most likely have for selling, is that the 5 minute structure should have been broken. So this was the area where I was telling him that okay, we can look for sells, but at the same time, what was happening is that it was continuously being making new highs. Yeah, and it never broke it. So coming back to the point where we we were expecting sells because the structure broke, but the 5 minute, so based on this was the high and this was the low, and this was like the break. So obviously I was expecting some sells to play out, but at the same time, what happened is that 15 minutes, when we go on the 15 minutes now, or else let's say the 5 minutes, so there was like a change over here in the structure. And this was like the New York session, and this was like a good buy. So even though based on the higher time frame we were expecting sells, there was like a lower time frame entry being presented, and that pretty much played out very nicely. And there were multiple entries over here. So even though we might be wrong with expectations, sometimes the lower time frame might give us hints to be right again, which is this. Because there was like a free area to just like go up, because there was nothing on the left. If you see, this is all inefficient pricing. So we'll come on these things later on. Inefficient pricing meaning, as you can see, there's like the free flow of the price, right? There is nothing, there is no bullish candle in the middle of a bearish trend to stop prices. Okay, so that's like one way we would have gotten in the buys. So again, now that we see that, okay, fine. And the most important thing is just knowing the trend, which is obviously bearish now. See. And again, we are bearish. So obviously,
that means the structure would always hold. Maybe in the
yeah,
higher frame it gives an illusion that it has broken the higher level or the lower level. But in the smaller frame, you will see the continuation of the structure.
yes, absolutely. Yep, that's right. Okay. So let's go from the external structure, which is the main structure, to the internal structure now. So let's say this is the chart and it's having internal structures in between. So let's say this is the internal structure. Okay. So now if we look at this, and if we look at the internal structures, which is like obviously the bearish sides from the high to the lows. So if we try to translate it, since the market structure is bullish in nature because the overall structure is bullish, okay, these counter trends will obviously look bearish. So in the overall higher time frame, since it is bullish in nature, the retracements will be bearish. And break of the previous lower high will be a confirmation that okay, we are just going to make a new higher high, which is this.
Yeah.
Okay, so that's how the transition of the structure, especially the internal structure, happens. Because in a bullish structure, this will be bullish until and unless we are not breaking the previous higher low. So once the previous higher low is broken, okay,
Yeah.
we can expect sells. So once again, in this example, so this is the internal structure now, and see it's breaking over here, and that's when we get the sign to continue. Once again, we are retracing down, it's breaking it, and it's continuing up. So this repeats itself again and again, and we'll have the entries over here and try to go with the higher time frame order flow. Because when we are entering just on the higher time frame, let's say you're entering over here on the higher time frame now, you'll have a stop loss this big. But once you, let's say you have a stop loss which is 100, but once you refine that and now you keep the stop losses based on the lower time frame, that 100 might come down to 30, which might increase your risk reward ratio by almost, I don't know, like 60%. Yeah. So all of this will be the internal structure based on the higher time frame now. Because higher time frame is bullish, but since the lower time frame is retracing downside, that's like the internal structure. So we'll try to just see one thing and just understand this for today, that this is bullish, and for it to become bearish we need a break, and then we might have this. But this on the live chart will look like this, and this will be the main structure. So this obviously will be the main structure, which is just this. 1, 2, 3, 4, 5, 6, 7. And this over here, anything happening in the middle will be the internal structure. Okay. So that's the internal structure within the main structure. Yeah, clear?
Yeah.
So we'll take some more examples now. Like just look at this, that just right now how the price is bearish, right? And you see, there was a trade here which you would have been taken, which you would have been able to take, just like this, because the market structure is bearish, and stop loss would have been above the previous structure, which is this, since we are bearish. And now once again, that would have been the TP. And now once again, since we are bearish, this can be, when you combine the candle, maybe this would have been your entry, stop loss above the previous high, which is the previous structure.
Like
And then
on what basis we are taking this entry?
so the market structure is bearish.
Yeah.
Right? We want the lows to be taken, because if the market structure is bearish, the lower lows will obviously be taken.
Okay.
Right? And since the lower lows is like the weak areas to be taken, that's where the market basically flows with. So we can obviously have like a confirmation along with it, like some candlestick patterns or something of that sort. And we always more than likely need the entry in the premium zones. So this is obviously premium, because once we see from this level to the downside, this will be the premium zone. Anything above this will be the premium area. So we want to be selling above the equilibrium, which is the premium area. And there's like a lot of things to combine along with it. And obviously in the live market, we won't be like selling this deep in the leg, because this leg has been bearish for so long. So we obviously don't need to be selling over here, because now the market might turn short-term bullish. Is because firstly, we are reaching a good level of, like a support. And second thing is that the HTF is bullish. So we are waiting for the internal structure to shift so that we can look for buys now. And that's what it's doing now. That once we break this now, we are bearish right now. Okay. So this is like the last point, last lower high. So once that gets broken, we can obviously look for buys. Okay. So that's how the overall structure basically plays out, from bearish to bullish and bullish to bearish. So there might be a move where it can still come down, but just to be safe, we won't be selling so low that there might be retracements and might take us out that easily. Okay. This is clear? Yeah.
Yeah. I could understand the structure and the internal part, but I could not understand the entry level. Like, where do you take the trades in this?
So on the trading part will obviously come down later on, but the basic idea remains this. So basic idea remains that, okay, if we are bullish, we will obviously be trying to buy in the discounted area, which is the 50%. So this is the structure. Let's say this is the higher low and this is the higher high. And this is the equilibrium. So obviously below it will be the discount area. Okay. So this is bullish, right? So now this area is counter trend because it's coming down. So based on the lower time frame, it might look like this.
Yeah.
So all we care about is a break. So that now the lower time frame is getting from bearish to bullish. So it has become bullish now.
Okay.
And now we are looking for buys. So we just need to support the lower time frame with the higher time frame direction.
Okay.
Yeah.
Okay.
So that's pretty much the idea. And obviously there will be a lot of things along with it. We won't just like try to buy in middle of nowhere or random places. There will be order blocks, there will be inefficiencies, there will be supply demand areas and all these things to make more confluences with our entry and the directions which we might get along with. Okay. So more than likely this might be broken. So see, higher time frame key level, since this is higher time frame key level, because now basic like support level, higher time frame key level will equal lower time frame opposite momentum, meaning if the higher time frame area is getting approached by lower time frame price action. So this is 5 minutes, right? So 5 minutes is getting approached on the H1 support. It will obviously have some reaction toward the opposite side.
Yeah.
So this is a trade right here, right now, which I might just take right now, which is so clean, is a buy just right here. And the stop loss here. That's it. That's like the trade. This will be the trade, and TP will decide, because since it is counter trend now, based on the lower time frame, it's counter trend in nature. So we'll just see that how we can get along with it. But this is like the basic idea which we get along with.
Okay.
So look at the line chart. There is a transition in the trend. It obviously broke it. So even if it breaks by a pip, it's still counted. You see, that's like the break above the previous lower high. That's the break. Okay. And now, I mean, there will be obviously a lot of things such as this is inefficiency, this is the order block, which will come on later on. But even if you don't want to use them, you can just use structure in your favor. And since you know that now, you can just like have an entry after it's broken, keep your stop loss below the low, and maybe like take 1:2, 1:5 just here. Okay. So now you have a trade which is with the high time frame direction.
Yeah. So, like, if I summarize it, we need to look at the higher time frame and see the trend, like whether it's bullish or bearish, and
Yeah.
what those they would be in those trending structures. There would be internal structure, which on
Yeah.
the lower time frame would be alien to the higher time frame, right?
Sure. Exactly. Yeah.
And when in the lower time frame that structure breaks, we can take a counter trade for that.
Yes. Proper.
Okay. Got it.
Yep. So that's pretty much it. What time are you free tomorrow, though?
Anytime,
Same time?
because
All right. I'll text you then. I'll
same
text you
time,
then.
morning, evening, anytime I'll find time because I can like.
Perfect.
Yeah.
So we'll catch up tomorrow. Yeah.
Yeah.
All right. Perfect. Bye.
This is a good trade. इसमें तो वो बन रहा है.
Yeah. This is like a good trade.
Yeah.